Hi, I'm Anna Wolf. I am the owner of Superscript Financial Marketing Agency, and I'm going to be moderating this panel today on Get Out and Vote, the Future of Proxy Voting. So before I introduce our incredible panelists, we actually have a question we want to ask this audience. We want to take a quick poll. So by show of hands, how many advisors here are having proactive conversations with your clients today about proxy voting? Raise your hand. Okay, a couple. No, I like that. Mostly no's, looks like. Okay, thank you. Okay, follow-up question, and this one might take a little bit more courage, but we're all in this together. How many of you, if your clients started asking you a lot of questions about proxy voting, how many of you feel comfortable or prepared to have that conversation? Show of hands. Anyone? Oh, cool. You should come up here, probably. All right. Okay. So thank you so much for indulging us in that. If you take one thing away from this session, it's that the number of conversations and probably the quality of conversations that you're having with clients about proxy voting is going to go up in the foreseeable future. So that conversation is coming. But right now, what you're experiencing is that the fact that only about 10% of individual shareholders vote their shares, and the rest of your clients who are mutual fund, ETF, and retirement plan investors don't even have the option of voting their shares, right? Because the asset manager or the plan sponsor is voting on their behalf. So if you're not having conversations about proxy voting with your clients right now, that's because it's not even on their radar, right? Or for the average investor. And that's what's about to change, and that's what we're going to help you understand today, why that's changing, how that's changing, and also prepare you for that conversation, because this is an opportunity for you as an advisor to differentiate your business and also get better engagement, deeper engagement with some of your clients, particularly your next-gen clients. It can also be a risk if your competitors get out ahead of this conversation before you do. And the good news is, because you're sitting in this session today, you're in the opportunity camp. So good for all of you. Okay, so without further delay, I'd love to introduce our fantastic panelists. I've already learned so much from them. They are representative of some of the most innovative and exciting things that are happening in this active ownership stewardship space. So we have Georgia Stewart, who is the chief executive at Tumalo, and we have Yasmin Daya Bilger, who is the head of ETFs at Engine Number One. Thank you guys both so much for being here.
Thank you.
Yeah. Please. Okay, so I have a few questions prepared, but we'd love to make this as interactive as possible. So please add your questions to Slido, upvote them, and we'll keep an eye on this. And we want to make sure we get to as many questions as possible. But I thought a good place to start might be zooming out a little bit, because I think at the heart of this issue is just even the concept that shareholders can influence the companies that they invest in. So can you give us a little bit of a lay of the land? How does proxy voting work today? What's the process like? What are some of the types of proposals that investors can vote on? And maybe Georgia, I know you explain this a lot, so maybe we'll start with you.
Yeah, okay. So we explain this a lot because our business is about engaging retail investors and advised clients, engaging them in the proxy voting process. And so I guess how we always start is with the concept that actually every year a publicly listed company like Meta or Facebook, Tesla, Exxon has to have an annual general meeting, and at that annual general meeting, any shareholders are able to vote on issues that are raised, which are typically like CEO pay, director elections, the auditor selection, but increasingly you also get shareholder proposals, especially the biggest companies, where shareholders might be asking for disclosure on human rights, for example, or disclosure on plastic, or for the company to address its climate strategy. And that's becoming more and more common, and these are the types of issues that we see retail investors really interested in and engaging on.
Yeah.
Well, I may just add, because I hate the word proxy voting, because it sort of makes everyone's eyes glaze over a little bit. It feels so technical. And that's part of the problem, and I think why many retail investors haven't gravitated towards it. But when you talk about issue areas that people care about, diversity, equity, and inclusion at big companies, decarbonization strategies, and brand names they know, like Georgia mentioned, and I'll give you an example. Tesla is a great one. Last fall, they had a vote put forward by a shareholder that asked Tesla to provide comparable and quantitative data on their DEI efforts. And this actually predated some of the headlines that came out after. Like, many people read about those topics in mainstream media. They care about them. They want to buy products from companies that care about these things. Little did they know, through their advisor, their retirement account, their 529, they were a holder of that company. They had a right to vote. They had a right to influence that company on that topic. It actually passed, by the way, and so Tesla, you should be issuing a report that gives more information to shareholders. And I think that's the really powerful mechanism here, is that shareholders sit at the center of the system. And actually, you as a shareholder have a right to ask a company, I would like to know more about what you're doing on these topics. And that influence is so powerful. It's so little known as well.
Yeah, and okay, so you gave a really great example there, but I think it'd be helpful to go even deeper, because I think my guess is that part of the obstacle for average investors is this sort of disenfranchisement with, like, does this really work? Can I really make a difference? But you have an amazing example of a proposal that was put forward that the shareholders, the ExxonMobil example. I'd love for you to tell that story.
Yeah,
here.
sure. So Engine Number One's an investment firm that launched about a year and a half ago. We're really focused on how environmental and social issues interact with a company's ability to create value. Or said differently, we think many of these issues are not just ideological issues, they're business issues, and that the market has sort of mispriced them. And we came to market, I suppose, in a very bold way. We launched an activist campaign where we nominated 4 people to the board of directors of ExxonMobil. We did that while only owning 2 basis points of the company, so very, very small holders. And I think what was quite interesting about that campaign was, first and foremost, we actually focused on the economics of our proposal. People don't know this, but prior to our campaign, Exxon did not have any independent directors with outside energy experience. I mean, that's a phenomenal statement for a very technical company in an industry that's going through radical transformation. Whether you support climate change or not, believe in it or not, I think we'd agree that government regulation, shifting consumer preferences are driving a lot of change in that industry. I think the lesson and takeaway of it that I thought was quite profound was, with 2 basis points and an argument focused on shareholder value, you can actually get a lot of people to vote with you. In fact, 50%. And drive a lot of really big transformational change. I think it also speaks to the power of engagement. I think the predominant mode of thinking is, if I don't align to something, I shouldn't own it in my portfolio. Like, if I really believe that I want companies in my portfolio to have more women in leadership, I should just buy those companies now. And I think what was really interesting about our campaign is it made the case for active ownership, the idea that you own, you engage, and you can transform as a shareholder. Now, that was a really big, broad, public way of doing it. It was also, by the way, I would say, one of the things that made this real for the end investor. My favorite story is my best friend from LA, who's like a talent agent, never has known what I've done in my career for like the last 20 years, wrote me a text afterwards being like, oh, okay, I'm getting it a little bit, because it had transcended from financial speak into something they could relate to. So I think these stories can actually be very powerful for retail investors. But I think it made the case for why being an owner has value. It has economic value, it has storytelling value. But it's just the tip of the iceberg. There's so much more. And we're actually seeing a lot of engagement from shareholders this past year who sort of felt really energized about the idea that they could come forward and bring proposals to companies and try to drive the change they believed in.
I think that's a great segue to have Georgia talk a little bit about the technology at Tumalo, because that's exactly what you're kind of enabling, right? This growth in shareholder engagement.
Yeah, exactly. So I guess most people own shares through the funds that they have, and that there's a question on the screen there actually, which is about our big investment companies doing proxy voting on behalf of clients. And the answer is yes. In most cases, that's how people own the market, and that's how they're invested. And so essentially what we are doing is allowing clients who are invested in funds to be able to have a voice on the issues that they care about, like that Tesla human rights proposal. And what you said, Yasmin, is very true. Like, it is mostly based on like an economic premise as as to why these shareholder proposals should go through. And for example, that Tesla report that did pass, the basis for having that Tesla diversity and inclusion report is because having more diverse companies have been shown to outperform less diverse companies. So all of the proposals that are put forward to companies, although they may also be seen as value statements, they're also like economic statements, and can be very impactful when they're followed through. For example, in the UK last year, we had shareholder proposal at a supermarket called Sainsbury's. It's like the leading supermarket in the UK, and the proposal asked Sainsbury's to commit to paying their employees a living wage, like in London and other places around the UK. And when Sainsbury's committed to that, their competitors also had to commit to that. So we created a kind of step change in employee well-being and employee retention and competitive things that were beneficial for Sainsbury's in the first instance, but then actually became super beneficial for the UK economy at large.
That's awesome.
Can I add on quickly to this question a bit?
Yeah.
Because I have a thing I really care about on this topic. For a while now, institutional investors, large institutional investors, when they are evaluating an asset manager, they of course evaluate them on their investment performance. They ask all the standard questions that we all know about. Many of them also ask about proxy voting. They've asked about the guidelines, the track record, the team. It's a part of the due diligence process. Because they understand the power of that vote. They understand that they are, when they invest with a manager, effectively delegating that vote. And now, actually, one of the transformational things we're seeing is that many institutions are taking that vote back. The question in this that we got is it concerning that big companies are doing proxy voting. What it implies is that people don't even necessarily know that's happening. The average S&P 500 fund for the last 5 years has voted against 80% of environmental and social shareholder proposals. You may think, well, I would have voted against more. That's a totally fine viewpoint to have. The reality is people just don't know that there was a vote, that there was power behind that, and that in fact most of these proposals fail because ultimately ownership in our system is very concentrated. And so I think this is a really important conversation because it's actually at the heart of how the capitalist system works, but it's actually a conversation that I think I see quite a dichotomy between institutional investors and the average wealth investor. It's a gap I would love to see closed. I'd love for individual investors to understand the influence that exists in their assets.
Yeah, it's interesting because we chatted a couple weeks ago to prep for this, and I came to the conversation with a lot of questions about ESG. I was like, this is an ESG strategy, like, where does it fit in the spectrum? And you both completely blew my mind immediately. You're like, this is about more than just ESG. I mean, I think something that I'm learning from walking around and going to the sessions here is that advisors need to have a perspective on ESG or whatever impact investing, whatever they want to call it. And the nice thing about this is kind of that it could go either way, right? Like you can have clients who want to vote a certain way. You can have other clients that want to vote another way. And it's actually kind of just agnostic almost. Would you agree with that? Or
yeah, I mean, I think so. If the content is made easily accessible for the client, and like we have at Smello a platform that does that for retail investors, then you see huge engagement relative to the stat that you shared earlier around proxy voting, maybe 10% of people. But we see huge engagement, like 25% upwards of people who are not even invested directly in stocks. Like this is investment through funds, but it's so easy for them to consume the type of content that they are interested in. And I think that conversation around values that advisors are increasingly having with their retail investors, with their clients, is a perfect place to kind of play this into the conversation and also create that kind of ongoing engagement with topics that people really care about. So you could focus on the gender votes or the human rights votes or the environment votes, depending on what it is that gets your client going and the type of content that they would want to consume.
Yeah. I mean, we've covered this a little bit, but I want to make sure we get to all the nooks and crannies of it, which is, it seems like voting should be one of the main perks of stock ownership, but the voter turnout has historically been really low. Why do you think that is, and what are the kind of things that are changing to make it more accessible for people?
Well, I think people don't know they have a vote. This is where I feel like advisors actually play, in my opinion, a really critical part of the landscape, because this is a complicated system, because I think the average investor actually hires an advisor to help them navigate many of these types of things. And so I think historically why it's not been top of mind is because it's just been a lack of awareness to one extent. Another extent is I think advisors, in my opinion, having spent a lot of time now traveling across the country talking to people, it's sort of where we started. It's like, are you prepared to have that conversation? And there's a little bit something scary about that. You sort of say, okay, I think this is important. I would like to differentiate myself by bringing real value to my client that's different from what people around me are talking about. But wait, now how do I do it? And so it kind of poses in the very first instance a risk that you step into a space that you don't understand. So I think that's been historically a limitation. It's totally changing because like the companies like Tamello, companies like Engine Number One, so many other actually vibrant things happening in the space with the goal being to create simple stories for advisors to engage with their clients on. So when I started with the word proxy voting, everyone sort of steps back and they say, oh, that sounds complicated. But then we say Tesla DEI, everyone says, well, I actually have an opinion on that, or I can relate to that. Yeah. And so I think the linchpin to all of this is actually how do you simplify it and how do you make it, as Georgia was saying, simple company stories. We actually do this thing where every quarter we put out, I mean, this may sound very simple, but 3 case studies. We pick companies that people care about, Home Depot, ExxonMobil, Tesla. We pick issue areas that are top of mind. And just like you tell stock stories and investors to talk about or bring to life the investment performance in their funds, this is just another mechanism to do that. So I think historically there hasn't really been the support around it from asset managers and other players in the ecosystem. My personal opinion is that one of the byproducts of our Exxon campaign was actually that it just highlighted there's a vote altogether. So, I think that kind of supercharged it, and there's a lot of other mainstream focus now on this space and resources to support that conversation.
I think when it comes to telling the story as well, like closing that loop is really important. One of the great things about voting is that it allows a client to actually engage and to put their own view forward and then to have a response and to understand the impact and to have a result. So rather than kind of pushing information out to the client, you're like welcoming them into a conversation that they want to have. And so, for example, if you are voting on a human rights issue at Tesla, you're then going to know, like, what happened to that issue? Did it pass? Did it not? If it did, what are they doing about it 1 year later or 1 month later? And if it didn't pass, what does that mean? And what's the next battle going to look like next year? And this also creates, like, long-term engagement with the client that's not just focused on performance. And it's not just focused on, like, maybe the drier financial aspects. And we see that with some of the robo-advisors, for example, where the clients invested in their kind of impact funds are stickier clients, and they stay for longer because they're in there for something that's more meaningful and more long-term, more
than just
impactful.
performance.
Yeah, exactly.
Yeah. I did an informal poll of some of my friends who are advisors before this, and I was like, what do you think about proxy voting? Would you come to this session on the future of proxy voting? One of my advisor friends said, the number one question I get from my clients is, how do I turn this shit off? But then I told her everything I learned from you, and by the end, she was like, this is fantastic. I'm going to get my team on the phone with you. We need to talk about this, because any conversation I can have with clients that's different is good. So if that's a helpful takeaway for anyone, sharing that there. Okay, so we have another question here. What types of issues are gaining the most traction and winning proxy votes? Climate, diversity, others?
Well, so this was a really interesting year from a trend perspective. So first, before we get into what happened in terms of segments, there were just more proposals altogether. I think the number is something like 20% more shareholder proposals this year than the prior year. So a very active shareholder base. Unsurprisingly, you saw a lot of that in climate, but broadly speaking. There was also in 2021, which I thought was really interesting, there was an increase in support. Climate led the way. Actually, we'll see one interesting fact about this space is that asset managers are not required to disclose their votes on a real-time basis. I think this is a hurdle. And I will say, as a plug to us, after our annual company meetings, when we vote, we put it on our webpage because we just think that transparency is extremely important. But we're still sort of seeing where the numbers shake out, but perhaps there's a decline of support this year. But you're definitely seeing climate has sort of led the way, but definitely also an explosion in proposals in the DEI space as well. And then general shareholder engagement, broadly speaking. There was also a wider range. Your typical shareholder proposal is a request for information. From my personal opinion as an investor, you want more information. That's like something you can consume, put in your investment process. we tend to support those in a big way. There was also some more aggressive proposals that were put forward, and I think the spectrum of what shareholders are actually asking companies is widened out as well.
Yeah, like there were some examples of proposals at McDonald's this year where shareholders were asking them to do specific things with the way that they cared for pigs in the supply chain. So some of them are getting super prescriptive and not necessarily gaining traction, but certainly gaining attention. I think from our perspective, we serve a whole range of retail investors and very different demographics, people all the way from maybe 18 when they first get a workplace pension all the way up to 70 before they leave the workplace. And we are seeing different types of people engage in different proposals. Overall, the most popular proposals have tended to be on plastic pollution and environmental related proposals, including climate. But we also get pockets of people within a specific workplace, for example, or a specific demographic where they really care about animal welfare, or they really care about gender equality, or it becomes very specific depending on that person's life experience and often what company they work for. So if they're in a gig economy workplace, when we take our solution to retirement plans, we often see people support things like employee representation on the board.
Just to give a little plug to what George's firm does, what I think is really cool about it is the personalization of it all. The reality is that not every issue area is relevant to the entire client base you serve. And in fact, that's the bit of the scary part of it, is that if you open the door to the conversation, you have to have all conversations. And that may not be additive to the client engagement, but the reality is, just like you can get to understand your client and their investing preferences, you can also get to understand what are the issue areas they would like to be engaged on and what are the issue areas they would not. And then it's about finding content pieces to serve on that in that lane, and I think that personalization element is a huge differentiator.
It's so interesting. That's the first time I heard you say that there was this spectrum of age range on the Tumalo platform. I mean, I think I had an assumption that this was very much like a next generation thing, that there's more that kind of spirit of ownership and wanting to vote with your dollars and things like that. I'm just curious, if you could say more about that.
Yeah, so we do have the majority of our investors who are on our platform and consuming our content and voting are 24 to 36.
Okay.
That maybe accounts for 60%. But then there's a long tail of 40%, mostly on the other side of that, so from 36 up to 70.
But what's important for that is that's the whole how do I expand my book, Next Generation of Wealth conversation, as you think about, particularly engaging across a family unit. I think that's one of the things I've heard a lot in this, particularly around DEI, is, how do you retain a book of business when a family member passes on? Or how do you engage with other parts of the familial unit when they don't maybe appear to care about the investing side of it? Well, one of the interesting things I heard from a few advisors when I was talking to them is this is a way to actually talk to the next generation of wealth within a family, get them engaged on issue areas, and establish that relationship, which goes back to the opportunity side of this.
Yeah, I think the key word is engagement. Surfacing up content that allows you to have a much richer, values-based conversation with a client.
Yeah, and we talked about this a little bit, but I think it's super important for us to give advisors here some talking points. I mean, talk me through it. I'm your investor. How do you approach this conversation? What is the story that how would they talk to a client about this?
Well, I mean, it feels like I've been to so many of the talks today and talked to some of the people in the booths, and there's a lot of conversation about pulling people's values into the kind of onboarding process and understanding what is important to your client. So if you can find that out, not only can you kind of design your investment portfolio around what matters to them or the goals that they're trying to achieve, but you can then insert that into their experience throughout your whole relationship with that client. So if you can go back to them on a quarterly basis, using our content or wherever you want to get your content, and say, here's a vote coming up. I want to know what you think about this issue. Let's have a conversation about it, and give your client a way to engage on a specific poignant issue. Then I feel like that's enough.
I do think you also have to explain the why. Why should someone care about this? And maybe I'm a sucker for statistics a little bit, or at least I gravitate towards them. And I think people just don't know the basic facts about how the system works today, and that the average company in the U.S., large company in the U.S., is owned somewhere between 20 to 25% of the largest passive providers, that votes are cast. I think that statistic around how what isn't the bedrock of most people's portfolio is sort of low-cost market cap passive has historically voted against environmental and social proposals put forward by shareholders. I think it's empowering to think, well, you actually have choice now, and so this may be a way to get people to realize you're bringing something to the table that they didn't even know existed before. And so I think even just starting at the way that the whole thing works is kind of foundational, really.
And you said it earlier, but also taking the conversation away from divestment, away from like, oh, you don't like fossil fuel companies, so we'll just screen them out of your portfolio. Well, the alternative to that is let's own them and we can work together to change them, and your client can feel like they're having impact and actually see the impact in the news the next week. Is a really powerful and real thing. Like, that's not greenwashing, that is real. If you're placing votes at these companies through your fund manager or directly if they're in a stock, if you own the stock directly, then you are having impact.
Yeah. I see there's no more questions here. I just want to make sure we're okay on time. Okay. I'll wait until they pull me off the stage, I guess.
We can see our pictures now. So,
I think one of the things that we want to leave people here with is like, what are your resources? And I don't think we've talked about Vote yet, have we? And that's another way that, and it's a different mousetrap, right?
Well, yeah, I'll just give it in the sense of just explaining it as a trend, not really meant to be a plug pitch, but we launched our first ETF a year ago in June, and the whole premise was quite simple. It was people have voted, no pun intended, they like low-cost market cap. It's the bedrock of most people's portfolios. Let's not change that. That's one of the challenges, I think, with sustainable investing is we're changing the portfolios. We're introducing tracking error. We're often making it 3, 4, 5 times more expensive. Let's keep that as similar as possible to what people own today, and just to provide a different approach to what we call active ownership, the way we vote our shares and the way we engage with companies. And so since we've launched, we've supported about 85% of environmental and social shareholder proposals. So just a really different approach. Not an approach that everyone wants to subscribe to, but a very different approach that we think brings together key environmental social issues, but with also real alignment to economic value at companies, as well as then, and this is sort of outside the purview of this conversation, but the engagements that we run. So we work very closely and directly with very large companies, particularly in I'd call it the higher emitting segments of our economy. So transportation, agriculture, oil and gas, around how they think about their decarbonization strategy. And our idea was bring passive investing with active ownership and make it a really sort of simple other choice for people who already own that in their portfolio today. And I think you'll just see more of that. I mean, my hope is that there's just more innovation in the space so people have more choice around finding strategies that fit with them around how some of these votes are being cast.
Yeah, that's great. And I don't think you explained this. Like, do the shareholders of your fund actually vote?
No, we are. It's a really interesting question we didn't touch on, which is like, what's the role of what's called pass-through voting, and is that the future of this? Do you just give the power of the vote back to the fund holder? And there's a lot of mechanical limitations to that today. Although I'd say like some of the stuff that George's company is doing are really actually kind of leading that effort. But what we stand for and what our lane is transparency. We put our policy on our webpage. We put our votes right away after we cast them, and then we talk actively about why we cast votes. We actually, when someone asks us, why didn't you vote for something, we want to have that dialogue. And so I think there'll be a variety of outcomes here. Some investors don't want that vote. Some investors actually, just like they want to delegate investment performance to a manager, they actually would like to subscribe to a manager that broadly aligns with them and not have to take on that responsibility. So that's the lane we play in. But a whole other dimension to this is there a world in which actually directly end investors get that back? And maybe you want to comment on that.
Yeah, I think so. We are seeing a trend towards fund managers enabling institutional clients and retail clients to be able to vote on the securities within their fund, which is being called pass-through voting or voting choice. So BlackRock launched something earlier this year which allows their large institutional investors within pooled funds to take back that power to set a policy or to engage on individual issues. think we're going to see more and more of that. And I think a variation of it will be allowing clients to be able to have a voice, even if the fund manager still wants to place the final vote themselves. And that also, I mean, that's what we do a lot of today with like large firms in the UK, like Fidelity or Elgin, where the client can have a role in the process, but the fund manager is still doing the majority of the heavy lifting, but that story and that feedback loop is going back to the end client. But there's going to be more and more focus on this for the large asset managers. We didn't talk about this, but like there's an act at the moment called the Index Act, put forward by a senator in Alaska specifically, who is looking to force the large asset managers to delegate voting power to their underlying investors. And that act, I think, is not likely to go through, but there's a lot more attention on this issue, both from the investor side and from the policy side.
Yeah, we were talking yesterday about like, oh, there's so much going on in the markets. How does an advisor make this in their top 10? You know, like it's like inflation and keeping your clients invested and bull market, bear market, and like all the different products. And how is this going to float to the top of the list? And my opinion is that, what did I say? This is coming to a movie theater near you soon, because truly there is a lot of interesting things happening in the regulatory space that may bring this more and more to the forefront. And so, to some extent, it's about getting ahead of the conversation. I actually think proxy voting, and maybe we won't call it that, maybe we'll make it a more commonplace term, but that concept is actually just really pushing forward more and more. And so, whether it's things like the SEC putting out rules for companies to report on their emissions data, and now that's becoming more transparent, and asset managers having to sort of respond to how they account for that, or whether it's the reporting around for investment advisors, there's just a lot of regulation happening in this space that I think will elevate this conversation. You might as well get ahead of it early and make it an opportunity, and in my opinion, not a risk.
Yeah. And I want to mention that both of their sites have some amazing resources for advisors that do want to come up with some talking points or think through your storytelling on this. So tumalo.com, there's a blog called the Tumalo Mole. I learned a ton from it. And engine1, the number 1.com, white papers, research, like pretty much, her stats, they're all over that site. So thank you both so much for this conversation. It was fantastic.
Thank you.
Thank you.
Thanks, everyone.